Hello traders, welcome back and welcome to part 2 of how to trade supply and demand. It's myself, SKFX, taking you through this installment. And yeah, I hope you enjoyed the first installment of this second series we're doing. And what we're going to look to explore in this installment is the element of control and areas of control. And what I mean by that is this is when we start to integrate supply and demand with structure. Okay, because structure is king. It is the most important piece of forming directional bias. But the thing is, you need to understand where buyers want to buy and what areas they're protecting, and the same for sellers. And some tools we use within the concept of supply and demand is supply and demand ranges and chains. And what I mean by that is, as we're going bullish in a leg or bearish in a leg, buyers or sellers are going to create two things when they're mitigating their zones to get to their pricing objectives, right? They're going to create ranges of demand and they're going to create chains. And this is the same for demand and supply. So we're going to run through the theory and I'm going to talk you through what I mean by a supply and demand range and a supply and demand chain. And then we're going to look at a live example on US 30 on how you bring these two together, yeah? So if we look at this diagram that I've drawn up here, and if we imagine this is a 15M bullish cycle, and we're trading up to go meet our 4H objective. Okay, so as we can see, if we pretend we haven't got here yet, that price needs to go bullish, right? And it wants to take out the swing high here because it's a bullish market and structure is bullish. And you can take these lines here if we consider them as the 1M time frame. Okay, so we create this new high here. We trade back down into discounted pricing, and we have a demand zone. So you might catch a buy off here. Okay, so this is our first mitigation in the demand chain. This is our first point in price where buyers have stepped back into this market to take control. Yeah, because buyers weren't in control when we were selling down here. They weren't interested. And as we've come back into the discounted pricing, they want to get involved again, and they want to protect the structural format of the 15M. So yeah, this is our first demand zone. What might get you could catch a buy off here, and this is our first mitigation. And this is where buyers will start to buy up. So as they're doing this, what they will do is they will create these ranges of price, yeah? And all the ranges is, I talk a lot about time and price being unaware of each other, yeah? So all the ranges, and you can take it as your high, low, high, your structural piece. All the ranges is a supply and demand zone on a higher time frame, yeah? Because this could be like a 13M demand zone, right? Or 7M demand zone, or something, right? Price and time are not aware of each other. So when orders are being filled in at pricing levels, they're not concerned about the time frames and the next 1M candle. What we get is an illustration of how price has behaved at different pricing levels. And in this instance, sellers kind of came in, right, sold down. We had our demand mitigation, right? Demand kept control and they've brought the market back up. So now we have a range of demand, yeah? And it's the same as your new high, low, and so on. But you wanna see these ranges being created, and sometimes price is just going to mitigate the range, right? And this is what is really important about demand ranges and tying them in with your overall narrative of price. Okay, so say price brought up here. We have two ranges here. We have this range and this range, right? And then let's say there's actually an unmitigated 1M zone here, right? And you see this move here, you see this mitigation, you see this break of the high, creating a demand range, and you want to get involved, right? You want to get involved, but price never comes back down to your demand zone. All it actually does is mitigate the range. And you're thinking, okay, well, I'm just going to wait for price to come back down and I can get a buy here. The thing is, buyers have stepped into this market now and they're going to protect these ranges of price until they meet their pricing objective. And a buyer in this phase of the market cycle, their objective is to take the high, right? So once they've satisfied their order fulfillment and liquidity needs, they're not coming back down to the zone until we take the high, yeah? So it's really important that you start to build an idea of price and what's happening. So you have this range here, what would be a demand zone in a higher time frame, right? So maybe that could be like 5M. And so what you want to do next is actually think, well, I'm not gonna get a buy from here necessarily. So actually I need to follow the ranges. So where's our next range? Here. And then you have another range here. And what you need to understand is, when I talk about the market being fractal with structure, if you watch the structure mini-series, it's exactly the same with supply and demand. It's fractal, right? It's repeating on every single time frame constantly. But this time, it might actually come reach your demand zone. And that's great. You get in you get a confirmation entry here to take to the high. And this is how buyers or sellers will show you they're in control. Okay, so you get your structural narrative, which in this situation is the price 15M is bullish, so you expect 1M. Once it's aligned down here to go bullish, and then you start to build this narrative of how are buyers controlling their points in price, how are they creating ranges of demand. And what is the chain of mitigations? And as we can see, demand will continue to print these ranges of demand ranges until we take the high, okay? So once the high's gone, this is when sellers step in here. And they now deem it appropriate enough to come into the market because they feel that they can take control of the market and it's time for them to try and sell the market down. And then what we get is the exact same process, right? So we get a supply range, what is created. And then we come to mitigate the range, but maybe this time we actually do hit our supply zone, right here. And this is sort of, if you want to go counter trend, because you could catch sales here back down to the discount range of the leg, right? But what do you want to see? You want to see that supply is really in control until at least you hit the appropriate opposing supply and demand level. In this case, we're looking for supply to take control to a certain point where we expect or anticipate demand to step back in because we have a structural idea of the market, yeah? And as we can see, so we have a supply range built here, then they will print another supply range here, and then maybe we have a supply zone here, and what we're starting to print here is a supply chain. So all the chain is this sort of this sequence of mitigations within S&D zones. So where we have our first supply zone, what is mitigated, we sell down, we break below here, we create a supply range, then we have a new supply zone. What we could catch sales from here because we're starting to see the chain of orders hold in the market. And what this is telling us is sellers have stepped in and they're protecting their points where they're holding price, right? And for me, when I go counter trend, I'm not gonna take a sell from this first supply zone, right? Yes, we've taken a high. Yes, we might see V-shaped recovery, change of character, supply and demand flip, and all of that. But what I want to see is real intention, yeah. And this is why I use supply chains or demand chains when going counter trend. So you can catch a sell here, or you wait for the next supply range to be printed, and perhaps we have another zone here. We can get a sell off back down to our unmitigated demand, what we were looking for earlier to take a buy from, but we got so frustrated that we missed the move, because what will happen is sometimes the range just gets mitigated, because there's a range here, there's a range here, there's a range here, there's a range here, there's a zone here, there's a zone here. And you need to understand where are the mitigations occurring, how are the ranges being implemented into the market, and how is the chain forming, because a supply and demand chain could actually form by seeing a series of mitigation of ranges and zones together. And this is why you need to dig into the detail and really piece together a narrative of who's in control, right? So for me, if I was trading this, I'd be involved here at the discount of the leg, because it's pro trend, and I would take the pro trend moves up until we meet our objective here. Okay, and then if I was trading this counter trend, I would look for a chain and supply ranges to start holding and seeing the mitigations what will happen. So I'd happily be involved here with the right confirmations, and here using the structural idea of that this is a counter trend play, because when we trade counter trend, the life expectancy of this trade is only going to be until we hit our unmitigated demand zone. And I think a lot of people will get overly excited and think it's going to melt for 500 pips, but what we need to do is we need to establish who's in control, and this is how we do it. We understand where our unmitigated zones are. We understand if we're going against the flow of orders, that order flow has established counter trend, because we're seeing supply take hold of the market, and it is showing us the transfer of orders are holding, and it will give you good probability zones to trade from. So yeah, that's sort of like the bare basics of the concept of supply and demand ranges and supply and demand chains. So we're going to look at US 30 now and see how this actually plays out in a live market. So just on US 30, and we're going to do a bit of bar replay just so I can show you the dynamic between supply and demand ranges and chains when we're looking at who is in control of the market. So we're going to ignore structure just a little bit. Obviously we know the US 30 was bullish here last year, and then it switched bearish, right? And we're going to look at the relationship between obviously what we know through structure and how that is delivered within our S&D ranges and chains. So as we can see here and we're just going to do this on the daily, right? Because the thing is, like I've mentioned, price is fractal. So the daily delivery is going to be exactly the same as 4H delivery, or is going to be the same as 15M and 1M, 5S, 1S. The delivery is always the same. And it's really important you understand the higher time frame intention, because there's going to be points in the market where a higher time frame, the real points of control are going to kick in. And that happened last week on US 30 when we sold off. And we're going to run through this this element of control and how it transferred to sellers. And you're going to see that actually it was no surprise when US 30 hit the zone it hit, it sold off, right? So as we can see here, we have there's a demand range here, right? And we have demand zone here. So we've got this sort of chain playing out, and let's run. So yeah, this is what I was saying earlier. So this is a range of demand right here, but so's this, yeah. And you have to do your own testing and sort of get your own data to really understand what it is you want to use. Because now we're seeing this sort of the start of the chain. running through right here. Okay, cool. So we come in, we mitigate this, we mitigate the range, but we also mitigate the zone, create a new range or a new set of ranges, and within that we've created a demand zone, what we've mitigated, and now we've created a new demand zone here. So we run on. Cool, so that gets run through, but we respect the chain here. So we come to mitigate these zones here, and then price runs off again. And as you can see, look, so there's a chain here. There's a demand range here. It's part of our chain. Then it creates another range here, but we're also creating a range here. So we've got all these sort of ranges of demand. And now we're starting to build a picture of how buyers are controlling this market, and then you add that with structure because it's bullish, and this is how you start to understand where's the last point of demand or where's the last point of supply. Where can I look to get a trade, right? So as price creates this range, so maybe it comes to here. I'm not too sure. No. So what's happened here? What has happened here? This range has been violated, yeah? The chain has been broken and structure has shifted. Okay? So I just minimize this, delete that. As we can see, we get our first signs of supply coming into the market here and taking control, yeah? Then that is obviously supported by a break of a swing structural point, which is right here. So, you know, structure's bearish, yeah? So we can anticipate sells. So we have this new structural point put into the market. Oh, that's not held, that's broke. Cool, so the narrative changes, you see. Here we are buyers. Buy, buy, buy. The violation of our control points occur. Right, the narrative's changed, yeah? Giving us our new ranges of supply. And here we have supply zone here. And yeah, let's see how this unfolds going forwards. So yeah, we respect this point of supply here. And we continue bearish, right? So we break this swing low, creating a lower high and a new lower low, which is cool. So bottom here. So we have our range here. Now we've just created another range, right? So and now this is where you need to also, what I talk about in terms of a good point of interest, right? A good supply zone, what has done the right criteria, right? A supply zone, what has, or demand zone, but in this instance, supply. A supply zone, what has taken liquidity, right? So what has this zone here done? Well, it's taken liquidity here, yeah? Taking the liquidity from those highs, right? So it's taking liquidity, okay. Does it have interaction? Yeah, well, it's interacting with our new supply chain, right? Great, there's interaction here. Do we have interaction? Do we flip demand? Well, it's part of a move what takes over demand, right? So we have a demand zone here, right? There's our demand zone, or you could say that's you know, it's going to be a demand range on a lower time frame. And as you can see, so it's part of a move what flips demand, yeah. So it's got all the key criteria of a high probability zone, because then it also decides something, right? It decides to break this low, giving us a new swing low point in the market, right? So you need to ask yourself, right, I want to see liquidity built, right? Because if we're gonna get the real move, right, we need to induce it next. Yeah, that's the last piece of criteria what we need. We need to see liquidity built below or above our zones, which is what we get. What happens next. Yeah. So it's no wonder when you look at this and then you sort of see, oh, okay, I understand that this is where we need to target for sales, because, and this is how you use supply ranges and supply chains, because price is not going to want to come back up here. Yes, this extreme is unmitigated, right? But there's a chain of orders, right, being held, right? There's no need for price to come back up, because we've got this supply range here. What's been curated, it's been mitigated, and now it's protected. The point of price is protected here. Yeah. So yeah, daily goes bullish as part of its pullback back into our supply range. So the 4H will be bullish, 50 then will be bullish, but then you wait for realignment, and then you expect the higher time frame attention to kick in right here, as long as we see the right things. Yeah. So obviously we know what happens next. See that? See how we build for liquidity before our zone. This is the high probability stuff. This is how you're getting good quality trades, because now we're expecting the creation of a lower high on the daily. We're expecting the creation of a new swing point, and we get that, and the delivery is absolutely perfect. So what can we expect next for US 30? Well, structure is telling us it's bearish, right? So we can anticipate this low to go, yeah. And then once that low goes, we have a new rate. We will have a new range of supply, and then you can follow this chain down. But this is how you build your story of control. This is how you curate a narrative, and you use structure as the underlining backbone. So yeah, and I'm gonna wrap up there. So I hope you guys enjoyed this second installment. There will be one more installment with the supply and demand mini series, and we'll start to look at refining our zones. So this is the bit about taking a 15M zone and looking at the 1M refinements, and where we can get precise entries, right? So we can get the really refined entries and have a really small compact stop loss to maximize our risk to reward. But yeah, if there's anything you feel you're lacking from these videos, please leave a comment. Your feedback is welcome. Yeah, thanks for watching. Peace.